Hello everyone. Well, the dollar continued to lose ground overnight, with only the New Zealand dollar showing any significant weakness against the U.S. currency. That was largely on technical factors. As I mentioned yesterday, the market believes the Fed is on hold at least until December and perhaps even until March, which will be after the next debt ceiling fight. If you look at the Fed funds futures, which peaked on September 5th, they're now almost back to where they were before all the tapering talks started in May. Bond yields have also been collapsing. The 10-year Treasury yield, for example, is down 10 basis points just on the week and down 40 basis points from the September highs. Lower rates have helped to support U.S. stocks, which closed at a record high yesterday despite some disappointing earnings. But naturally, lower yields now, and even more so, expectations that rates in the future will be lower than previously expected, are hurting the dollar. In fact, the dollar is lower than it was before all the tapering talk began back in May. That's probably due to two things. One, even back then, people assumed that quantitative easing was going to end sooner or later. And two, then the U.S. economy was thought to be on much sounder ground than the Eurozone and the UK. But for example, yesterday's Philly Fed survey was lower than the previous month, although it did exceed expectations. But given the good economic reports we're getting out of other countries recently, we'll have to see some improvement in the U.S. statistics before we're likely to see any revival in tapering expectations and hence a revival in the dollar. Now for today, the U.S. and Europe have empty economic calendars. That will shift investors' focus to Canada, where they're releasing the CPI data. The Bank of Canada's core measure of CPI for September is expected to have risen 0.3% month on month, although that's an acceleration from last month's 0.2% rise. It will just keep the year-on-year rate unchanged at 1.1%. That would probably be neutral for dollar CAD. Otherwise, there's a noticeable number of central bank speakers today to keep the calendar alive. The ECB's Nowotny speaks in Vienna, and in the U.S., 5 FOMC members, Mr. Lacker, Tarullo, Dudley, Evans, and Stein will be talking. Now, it'll be interesting in the U.S. to get some more views on whether the Fed will be able to begin tapering this year or whether they may have to wait longer. In that respect, I think the views of Mr. Dudley, a noted dove, will be especially important to watch because if even he thinks they can still move, well then, they probably can't. That doesn't mean they will, but even the possibility would tend to support the dollar. For more information, including technical analysis, read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.